Hi, I am Anna. I come from www.ntvforex.com. Euro rallies 9 out of last 10 days, is 1.20 next. http ntvforex.com news ID F7F10B 7/23/2028 06:45 p.m. Euro is single-handedly the best performing currency right now. It's gone from 1.12 to 1.16 over the past month, and today's rally marks 9 out of 10 days of gains for Euro USD. We've talked at length this week about why investors are falling hard for the euro. European Union leaders put their differences aside and came up with a very powerful stimulus package that not only sends a strong message to the market but will go a long way in cushioning an already recovering economy. The US government, on the other hand, is not only struggling to get control of the COVID-19 outbreak in the US but to agree on an effective stimulus package. Unfortunately, unless extra unemployment benefits are extended, the program will most likely lack the punch investors are hoping for. On this basis alone, euro is more attractive than the US dollar. At the same time, Euro USD is lifted by the prospect of further improvements in Eurozone data and fresh weakness in the US. That divergence could become more apparent tomorrow with market economics releasing Eurozone and US PMIs. There's no question that the Eurozone data will be better, but we could see the first signs of a slower recovery in the US. Many states paused or rolled back reopening, and these measures will certainly curtail economic activity and restrain the recovery. The only question is when it shows up in the data. The US is also engaged in an escalating trade war with China, and even as pharmaceutical companies make progress on vaccine development, euro as a risk currency will rally on good news. For all of these reasons, unless there's unambiguously negative euro news, the pair's uptrend should remain intact. Euro USD broke through 1.16 today. The next resistance level is right above 1.17, where there are some key Fibonacci levels, but beyond that, Euro USD could make a run for 1.20. Sterling also traded higher despite the EU's top Brexit negotiator warning that a trade deal is unlikely this year. Part of its strength could stem from Friday's retail sales report, which is expected to show a continued recovery in spending. USD CAD dropped to a one-month low as the loonie shrugged off lower oil prices. With Canadian data, today's rally was surprising given the sell-off in the Australian and New Zealand dollars. AUD and NZD are lower in part because the Australian government forecasts a massive $184.5 billion deficit this year, nearly $100 billion more than the fiscal year that ended last month. The Treasury expects the economy to contract by 2.5% over the next year, with particular weakness for iron ore, the country's largest export. This is bad news for Australia, especially with new lockdowns in Australia. They reported a continued increase in new cases and the largest amount of coronavirus deaths in 3 months, prompting the government to mandate masks in Melbourne. Trade data is due for release from New Zealand tonight, and given the rise in manufacturing PMI, stronger numbers are expected. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://m.me/mt5.expert.advisors.